development. So these are our two bearish case scenarios and then our bullish scenarios. And then I will dive really quickly into my overall strategy for how I spot trade and DCA into the digital asset landscape and the three primaries that I look for before deploying capital into this space. Okay, diligence in their research. Too many people in crypto think that crypto investing is just about downloading an application on their phone, putting some money into this market, winging it, and getting lucky. That is the most illogical approach. And if you are consistently taking that approach, or no strategical approach at all, you're going to continuously find yourselves as exit liquidity or on the wrong side of the market, never actually making money from these markets. Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, ladies and gentlemen, you are going to want to stick around for the entirety of today's video breakdown because we are going to be diving into the very simplistic strategy that I utilized in 2024 to grow a seven-figure crypto portfolio that anybody can pay attention and tap into. It is very simplistic. We'll get into that towards the end of today's video breakdown. We're also going to be diving into the current crypto market landscape, why prices are down, really diving deep into fundamentals, which will give you guys perspectives as to what's going on in the digital asset landscape in the now and what to be paying attention towards moving forward into the future, i.e. coming up this week. All right. So with that being said, as always, hopefully you guys enjoyed today's video breakdown. This might be a little bit of a lengthy one, but this is going to be for those intellectually inclined individuals that actually want to learn something about these markets, actually care about their investment portfolio growing in the now, and actually want to make money from crypto instead of just dollar cost averaging in and then seeing immediate blood and red in your portfolio and wondering what the heck is going on. Why did I put $1,000 into this market and now it's worth 700? Okay. Now is not the time for that. Now is the time to tap into like-minded communities and information that is going to put you ahead of the manual retail crowd. And so in today's video breakdown, I really hope to do my due diligence to show you guys that here in the private CYPRX community, we are creating an edge in the market for not only ourselves, but also for individuals that come into our private community. And I'm going to physically show you guys all of that in today's video breakdown, that we deliver information in the private CYPRX community like months in advance before the average retail herd catches on to things. Okay. So we're going to start here with this post where I said to you guys, when the market drops by over 7, and I want you, by the way, to really think about this post, really, truly think about it. It is 2025. We are in an age of information, an era of education where, information is easily accessible to anybody with an internet connection and a mobile device. All right. We got to wake up. We got to stop following these bullish moon boy hypists that are just constantly fixating your attention on upwards price action all the time, leading you to believe that price action only goes in one direction, and that is up. That is the farthest thing from the truth. And if you actually want to mature in your investing and trading career, regardless if you're a dollar cost averager, you're a spot trader, or you're a leverage trader, or you're just looking to get into DeFi, there is a strategy behind when to enter into this market and when not to. When to actively engage in price action and when to sit sideline and be patient and wait for price action pullback so that way you can implement your capital. Okay. And so again, in today's video breakdown, we're going to jump into all of that. So I said, when the market drops by over $70 billion, it's time to really take a step back and reassess who you are following and where you're getting your information and what communities you are a part of. The CYPRX community saw this pullback coming well ahead of time. We covered it in both our private Zoom calls and our weekly fundamental reports. As we rolled into February, we have seen Trump tariff threats resurfacing, continued higher for longer interest rates, inflation, while not surging, is still far from the Fed's 2% target, prompting a cautious data-dependent approach from the Federal Reserve. A stronger dollar and bond yields remaining appealing to high net worth investors. This is the moment to align yourself with a community that educates you on the market professionally and correctly. Learn how to navigate these conditions and make real gains without relying on risky leverage. Again, we'll get to my strategy. It is very simplistic. Anyone can adopt it. It's not financial advice. I'm just going to show you guys how, without utilizing leverage, I grew a seven-figure crypto portfolio without having put seven figures into the market. Okay. Understand when to spot trade, when to DCA, and just as importantly, when to hold off and be patient. Investing is not just about making moves. It's about making the right moves at the right time. Now, does this mean that we are bearish going over this report with you guys today, going over the fundamental landscape? Absolutely not. Long term, of course, the uptrend in the digital asset landscape and in crypto, via our perspective, is still to the upside and remains intact. But if you are actually looking to build a profitable portfolio in the short term, again, the CYPRX community is an international community that will deliver the proper education and edge that you need to stay ahead of the retail crowd. And I want to show you guys that. So even some of our private CYPRX community members, I showed you guys some screenshots. This was just the market yesterday, down 2.2%, $76 billion. This was yesterday. We had an individual in our private community mention, after reading some of our reports, data that correlates with real world contextual storylines is definitely something that people should gravitate towards over moon boy hype. And I said, exactly. Too many people get overly hyped and sidetracked with all the bullish moon boy influencers. Imagine putting money into the market just last Friday when the total cryptocurrency market cap was at $3.6 trillion. And now the market cap for the total crypto space is down to $3.2 trillion. And imagine not knowing why your portfolio is bleeding. It's so unfortunate for individuals, especially new entrants into this space that come in. That's the reason why a lot of people, number one, lose money in this market. They never make it successfully long term, and it's because they have no idea what they're getting into, or the markets in which they're involving themselves in, or what creates these price fluctuations. Okay, so I really truly encourage you guys, regardless if you join the CypherX private community or not, based off the information I'm going to share with you guys today, that our private community gets access to literally weeks, if not months in advance. I encourage you guys to do your own research and really just educate yourselves on the market landscape that you are participating in, right? A stock investor is not, hopefully, again, because I'm sure that these people exist out there, but a stock investor is not just going to go buy stocks. Let's say a dividend stock investor, an investor that wants to make dividends and earn yield on, their stock portfolio. They're not just going to go randomly buy stocks and hope for dividend profits. No, they're going to go do research on the dividends the company's paying out, when those dividends are paid out, the performance of the company, so that they can make sure that they're going to get proper dividends paid out to them, so on and so forth, right? They do their due diligence and their research. Too many people in crypto think that crypto investing is just about downloading an application on their phone, putting some money into this market, winging it, and getting lucky. That is the most illogical approach. And if you are consistently taking that approach, or no strategical approach at all, you're going to continuously find yourselves as exit liquidity or on the wrong side of the market, never actually making money from these markets. Now, maybe long term, when prices experience massive bullish price appreciation, sure, absolutely. But wouldn't you rather take a more educated and logical approach where you're actually seeing gains in your portfolio in the now, right? If you put money into the market today, wouldn't you like to see profits tomorrow? I came into these markets with that mindset. And so I built my strategy around that. And I also built my community around that mindset. We want to make money now, not a week from now, not a month from now, not 10 years from now. We want to make money now, right? Obviously, of course, we position ourselves for the long term, but we also position ourselves for the short term. And so many people, they're not positioning themselves for the short term, and short term price action is what creates irrational decision making. Okay. And so you want to position yourself in such a way where you are seeing price appreciation, so you don't get discouraged from your investments. Okay. And you have to know how to do that by building a strategy, right? By joining a like-minded community where we put this information in advance. I'm done ranting, but I'm trying to get you guys to see that this space is so messed up. If you're following people on the internet that are just projecting this image in your head that prices are going to go up for forever, you need to unfollow them, and you need to get right. You need to get serious, and you need to take your investing approach. I mean, just mature is all I'm going to say. Okay. Because if not, those people are going to wreck you. They're going to wreck you left and right. So I just want to show you guys what I'm talking about. We deliver these things well in advance before the retail crowd. This is our December, let's go up to the top. I think this is our December 29th report. Yep, you can see right here. December 29th, 2024 report. We were talking about the crypto landscape. We were just giving a full breakdown on everything that was happening, everything that happened in the year 2025. And I just want you to note one of our projections here, right? We just kind of annotated one of the things that could weigh on market sentiment. Now, obviously, of course, this bearish case scenario has not unfolded. But if you look over here to the right-hand side, we just deliver a couple of fundamentals that could have weighed on market sentiment as we rolled into 2025. And keep in mind, this is back from December. Okay, so I'm showing you guys physically that we talk about these things to our private community way before the average retail herd, because then I'm going to show you guys a February 2nd, 2025 article from a retail outlet, a retail news outlet that is now just for the first time talking about these things. Okay, so I'm showing you guys that our private community has access to this type of information well in advance. And keep in mind, stick around for the entirety of today's video breakdown. I am going to go over my very simplistic strategy as to how I grew a 7-figure portfolio in this digital asset landscape without actually putting 7 figures into this market. Okay, so just right here, I said, renewed concerns over Trump tariffs, potentially escalating trade tensions, creating a risk-off sentiment. Any higher inflationary scares or hawkish Fed commentary signaling a higher for longer interest rate environment, squashing hopes for future rate cuts in 2025. All right. So those were just two things that we were talking about as December ended. Again, the year 2024, way ahead of the retail crowd. Here is a January 14th report, just to again show you guys that we continuously update our private community members on these things ahead of the retail crowd. January 14th, 2025. Okay. So this is about 2 weeks after that report. We continuously talk about fundamentals that could weigh on sentiment, that could flip market sentiment from bullish to bearish to prepare our community for certain changing market conditions. And here you can see I said here in red, always color coordinating things so that way people understand whether it's going to be bullish for price action or bearish for price action, really delivering detailistic fundamental breakdowns. Again, if you guys want access to these full hand typed out reports, which we're going to read in today's video breakdown, the most updated one, you guys can tap into our private CYPRX Discord. We have Zoom calls weekly, well over anywhere between 3 to 5, sometimes even 6 Zoom calls per week, whether it's DeFi fundamentals, whether it's price action analytics, whether it's full fundamental breakdowns with the current market landscape. We're always on Zoom with our private community members talking and discussing about the markets. And then you also have access to institutional delta zones and these hand typed out reports, along with hundreds, if not thousands of hours of crypto related research that never reaches the mainstream. All right. Head over to CYPRXtrading.com. You guys can tap in with us. I said here, again, this is from January 14th. On the other hand, higher than anticipated inflation data, any stronger U.S. data in the form of Empire State Manufacturing surveys. This was back when that data was relevant. Hawkish Fed comments from Federal Reserve officials, or any uncertainty surrounding Trump tariffs could deteriorate market sentiment. Okay, so you can see that we warned our private community about these things in advance. Now let's fast forward. Okay, look at this. This is a CoinDesk report. Keep in mind, I just showed you all physically how we're talking about these things months in advance to prepare our community members for these things. Okay, this is a February 2nd, 2025. So as of time of recording this video breakdown, it is the 2nd of February report. Okay, Bitcoin slips for the 3rd consecutive day as Canada's Trudeau retaliates to Trump's tariffs. And it reads here: the leading cryptocurrency by market value and the only macro asset open for trading over the weekend held below 100,000, trading weak for the 3rd straight day as Canada joined Mexico in announcing retaliatory tariffs against the United States. They also talk about down here, renewed trade wars coupled with mass deportations of illegal immigrants from the U.S. could add to inflationary pressures, weakening the case for a speedy Fed rate cut. Right? Again, I'm literally physically showing you guys that the retail crowd fundamentals that everybody else is reading is now catching up to CYPRX. And we do this literally week after week after week. And honestly blows some of our private community members' minds that we are so accurate with our analysis. And it's because we tap into the things that institutional investors and people with much more money than you and I that actually move these markets are tapped into. So I'm not trying to toot our horn here. I'm trying to physically show you guys that if you're tired of being the person that buys at tops and sells at bottoms, tap in with us. Okay, tap in with us because we give you a perspective as to what's actually happening in the changing market landscape to situate yourself on the right side of the market. It is not financial advice, but we cover these things well in advance so that way we can better prepare ourselves to be situationally aware of the changing market landscape by understanding that the market does not go up for forever, right? So that way we can have dry powder to deploy in times like this, or we can take profit when the market is at a peak or at a premium and we are starting to see changing market conditions possibly dampen risk on sentiment. Okay, so I don't know what else to show people outside of physical dated proof that we were talking about these things before the average retail investor crowd got on to this type of fundamentals. But again, to each his own. Okay, so with that being said, all right, before I get into my dollar cost average strategy, my spot trading strategy, again, this is a strategy that I'm going to go over that is very simplistic. It consists of 3 things that need to be met, 1, 2, 3, before I enter into the market. And we're going to cover all 3 of those things. Like I said, it is a very easy approach. It is not hard. Anybody could do it. Once I cover them, you're going to be like, wow, that actually seems very simplistic. And you're going to think in your head, that's super easy to do. But in reality, it's not. And if you've never heard of a strategy like that, then it's something that you might not know of. So before we get into that, this is our updated fundamental report. This is from yesterday, February 1st, 2025. I want to just read this thoroughly for you guys so you understand, as my followers watching, why the market sentiment is currently skewed to the downside. Okay, now does that mean that the bullish uptrend, long-term higher time frame is not intact anymore? No, absolutely. Do I think that this cryptocurrency market cap is going to be well worth more than $3.2 trillion in the future? 110%. But right now, over the past, let's just say 48 to 72 hours, we have seen over $200 billion liquidated from the digital asset landscape. Could you imagine being the type of individual that bought last Friday? And now looking at the market landscape, if you bought last Friday, you bought at 3.6 to $3.7 trillion in market cap. Okay. You bought when XRP was above $3. Now XRP is trading at $2.80 some odd cents. You're probably thinking that this crypto space is a scam. You don't want to have that mentality. You want to know when to buy, right? And you want to know when not to buy and sit on your hands and be patient by understanding these market fundamentals. So let me read this thoroughly for you guys, and then we'll get into the strategy that I take for my spot trading approach, which is again trading without leverage, or my DCA approach, which is again trading without leverage. I don't want anybody to think that this is the approach that I take when it involves leverage. It is not. This is an approach that anybody could take. Again, not financial advice if you're just looking to spot trade or DCA trade. Okay. And I personally spot trade utilizing Coinbase Advanced, just for if anybody's wondering. But that's outside of another video breakdown. Okay. So February 1st, 2025. Since reaching a weekly high of $3.57 trillion, the total cryptocurrency market cap has shed. This is, by the way, a weekly high because now today, Sunday, it starts a new week, but this is last week. The cryptocurrency market has shed over $200 billion. Several key fundamental factors contributed to this decline over the weekend, reflecting broader market sentiment and risk aversion amongst investors. Okay. So again, if you guys want access to these reports, tap into the CYPRX private Discord. I hand type out these reports every single day during Asia and New York session. Okay. So the fundamental drivers of the market weakness. And as you guys can see here, one thing that I did notice, okay, which I think that we actually took out this weekly low now, but as of time of writing this breakdown for the community yesterday, we were still holding above last week's weekly Monday low. Okay. One of the major catalysts for the recent pullback was the announcement of U.S. tariffs on Canadian goods. The U.S. government informed Canada that new tariffs, including a 25% levy on most Canadian imports and a 10% tariff on energy products, will take effect starting Tuesday. And as you guys saw back in December, this is our report from December. We mentioned one of the things that would weigh on market sentiment over a month ago, this is crazy, was tariff implications imposed from President Donald Trump. Okay. So, come on now. This was even before his inauguration. And how many people were euphoric thinking that Trump was going to be super bullish for crypto? And now reality is kind of set in, and people are like, oh, crap. Well, right now in the moment, President Trump's tariffs and all these things surrounding uncertainty, bringing uncertainty to the market, is creating sell pressure. You need to understand these things so that way you're not completely disoriented and brainwashed into believing that Trump is just going to send the markets to Valhalla every single day of the year, because that is not accurate. Long term, is Trump bullish for crypto? 100%. Are his regulatory clarity implications going to impose, positivity in the market and drive market sentiment higher? 110%. But in the moment right now, understand what is negatively weighing on price action. There's 110% some of President Trump's tariff implications. So in response, Canadian Prime Minister Justin Trudeau convened a meeting with provincial leaders to discuss retaliatory measures against the U.S. government. An escalation in trade tensions could have negative implications for global trade and economic growth, potentially leading to a more risk-averse environment in financial markets, including cryptocurrencies, if trade wars do escalate. Let's hope that they are temporary headlines that fade away. But as of right now, this is one of the major market fundamentals weighing on current price action. Over the weekend, geopolitical tensions also further weighed on market sentiment. Over the weekend, we had Russia launch a series of drone and missile strikes across Ukraine, killing 15 people and damaging critical infrastructure. Reports indicate significant destruction in Poltava, where a missile strike hit a residential building in Kharkiv. Hopefully I'm pronouncing all these things correctly. Probably not. I apologize. Where a drone attack resulted in additional casualties. The border conflict remains a significant geopolitical risk, also contributing to investor uncertainty over the weekend and prompting risk off behavior in global markets. And here you can see some of those fundamental reports from February 1st, 2025. And again, just showing you guys examples, talking about these things that could possibly weigh on risk sentiment well in advance, over 2 weeks in advance. This is from our January 14th report. We said here, any uncertainties surrounding tensions or peace efforts could also reignite market volatility, right? And now fast forward, this is our February 1st report, and we're seeing, geopolitical tensions and escalations weigh on risk asset sentiment. So to continue this, despite the market correction, the cryptocurrency market sector has shown resilience by maintaining above its weekly low of 3.25 trillion. This is obviously, of course, last week's low, printed on last Monday. As long as this level holds and the broader market sentiment recovers, the pullback could be temporary. However, macroeconomic developments in the upcoming week will be crucial in determining market corrections and the overall direction. So this week, obviously, of course, moving forward, this is what you need to be paying attention to. So key economic events to watch. This week, investors will be closely monitoring the January non-farm payroll report, which will provide insights into the strength of the U.S. labor market. The Federal Reserve recently left interest rates unchanged, citing a strong economy and inflation that remains above its 2% target. A robust jobs report could further delay expectations of interest rate cuts, leading to concerns about prolonged higher borrowing costs and tightening financial conditions. Market participants will also assess the potential inflationary risks linked to the U.S. trade and immigration policies. Previous labor market reports have reinforced expectations that the Federal Reserve will maintain its cautious stance on rate cuts. Any signs of economic overheating could increase fears of continued restrictive monetary policy, which would further weigh on risk assets, including cryptocurrencies. The recent sell-off in digital assets was largely driven by broader market sentiment rather than specific crypto-related developments. JP Richardson, or the CEO of Exodus, noted that cryptocurrency remains a risk-on asset, which we continuously try to tell people, meaning it tends to correlate with broader financial markets. When stock markets experience volatility, crypto often follows suit. Now, in the future, I firmly believe that a certain onset of digital assets will decouple from that sentiment or from that correlation, but right now, that still remains intact. So when stock markets experience volatility, crypto often follows suit. A market maker, Wintermute, echoed this sentiment, stating that market movements are primarily driven by correlations with traditional assets. Historical data suggests that Bitcoin and equities maintain strong correlations, particularly in risk-off environments. An investor note from BitMEX emphasized that this correlation remains a key market dynamic, reinforcing the notion that crypto will likely react to macroeconomic developments and investor sentiment in traditional markets. So looking ahead, multiple scenarios could unfold depending on macroeconomic and geopolitical development. So these are our two bearish case scenarios and then our bullish scenarios. And then I will dive really quickly into my overall strategy for how I spot trade and DCA into the digital asset landscape and the three primaries that I look for before deploying capital into this space. Okay. So the first bearish case scenario is if labor market data this week remains strong, fueling inflationary concerns, investors may reassess the expectation for future Fed cuts. This, combined with continued trade uncertainty and geopolitical tensions, could further pressure risk assets. In such a scenario, if crypto breaks below the $3.25 trillion mark, we could see deeper pullbacks down to $3 to $2.9 trillion, with more severe declines possibly pushing the market to 2.5 to 2.2 trillion near the November lows. This will be our first bearish scenario where we could possibly see the digital asset landscape push back down towards 3 to 2.9 trillion dollars. Okay. The second bearish scenario is if we break 3 trillion to 2.9 trillion dollars and the market sentiment continues to worsen, i.e. trade wars escalate, inflationary pressures increase. Robust economic data from the United States pushes back further on interest rate cut hopes from the Federal Reserve, right? Anything weighing on risk sentiment, even possibly geopolitical tensions escalating in the Middle East or Russia, Ukraine, okay? This would be scenario number two for a bearish case scenario, and that would be a deeper retracement, breaking below $3 to $2.9 trillion and making our way, coming back down to correct more of the November bullish move, heading us back down towards $2.5 to $2.2 trillion, right? Now, bullish case scenario, a more optimistic outlook, would require a combination of easing fears surrounding President Trump's tariffs, trade wars, and inflation, along with signs of cooling in the labor market data this week without sparking recessionary fears. A supportive macro environment like easing tensions in the Middle East, possibly even announcements of a ceasefire or, no more war escalations or whatever the case may be, or maybe even a peace offering in Russia, Ukraine, or the Middle East. Coupled with, obviously, of course, a de-escalation in these newly imposed trade wars. Okay. All of these factors could revive risk appetite this week. So if the market sentiment does flip bullish, this is our overall projection that right now, where we're currently trading at, which is right now at about $3.28 trillion, we're projecting that if the market sentiment flips bullish this week, we could hold above the December and January lows at about $3 to $2.9 trillion and start to make our way back up towards 3.5 to possibly even $3.7 trillion, taking out the most recent weekly high. All right. So, to end this spiel, as we navigate the upcoming week, our primary focus will be on the following key themes: US tariffs and their potential economic impact, the US labor market data and the January non farm payrolls report, and its influence on the Federal Reserve policy stance, and any ongoing geopolitical tensions and any signs of de escalations in the Middle East or Russia, Ukraine. From a technical perspective, holding above the $3.25 trillion weekly low is crucial for maintaining a short term bullish outlook. If the market optimism returns, the first upside target still remains at $3.57 to $3.7 trillion. However, breaking below this key support level under worsening market conditions could lead to a deeper correction in crypto. Overall, while the short term market sentiment remains cautious, the broader outlook will hinge on macroeconomic developments and geopolitical stability. All right. So again, if you guys want detailed access to these reports, I didn't read the entirety of this report, just covered a few things in this report from our most recent breakdown yesterday, February 1st. You guys have direct daily access to these by tapping into the CYPRX private Discord. You can do that by heading over to CYPRXtrading.com. Now that that is completely out of the way, I'm going to talk about the three things that I look for to enter into these markets. These are the three requirements that must be met for me to deploy my dry powder into these markets. That means I'm not chasing the market when the market's pumping. I'm not buying when the market is green and euphoric and thinking that prices are higher. I'm not buying when I see all these other euphoric retail bullish moonboy hypists on the internet say that XRP is going to go to $10, $20, $30. None of that. I'm looking for these three things in the market and these three things only. And when these three things are met, I take into consideration how much dry powder I have to expose to these markets. And I make a decision on how much risk I want to take on and how much of that dry powder I want to deploy and at what specific levels. These are the three things that I look for when I'm entering into the digital asset landscape. Number one, the fundamental landscape is screaming temporarily risk off or in the moment risk off, which I just showed you guys is the exact environment that we're currently operating in. As of time of recording this video breakdown, we got trade war implications being imposed left and right, creating market uncertainty. We got a pushback on Federal Reserve rate cuts, and we have geopolitical instabilities and uncertainties still lingering in the overall market landscape, right? So the market as of right now, time of recording this video breakdown, February 2nd, 2025, is risk off, okay? So the first thing that I look for when I'm deploying dry powder, and it's again a strategy, a strategical approach that you could start to implement, and it's not financial advice, is deploying in a risk-off market mood environment. Why? Because that is usually when the market tends to be discounted. You want to be buying at a discount, not when the market is euphoric and rallying and at a premium. Okay, you want to be buying into the fear, into the blood. You want to be buying when prices are at a low, not when prices are at a high. And prices are usually at a low when the market is fearful, when the market is, pessimistic, when the market is risk off, when appetite for safe haven assets has increased and appetite for risk assets has decreased. Okay. So the first thing that I look for when I'm implementing capital into these markets and how I grew a seven-figure portfolio last year, well, it took me 2 years, but how I reached a seven-figure portfolio last year was by only implementing capital into these markets when the market was risk off, given the fundamental factors. Okay. So that's one. And how do you learn the fundamental factors, the drivers that are creating a risk off sentiment? By joining a like-minded community like ours here at CYPRX. So if you guys want to write that down, that's step number one to what it is that I do to deploy capital into these markets is I look for a risk off market environment, right? The second thing that I must see in order to deploy capital into these markets is the crypto fear and greed index being below the 50 threshold. Okay, so as of time of recording this video breakdown, you can see that the total cryptocurrency market cap fear and greed index is at 47. So this is check number 2 that I like to see before I deploy my dry powder into the digital asset landscape. At any point in time that I see bearish fundamentals, risk off fundamentals, and the total crypto fear and greed index below the 50 threshold, I now have 2 check marks off the box that I like to see before I deploy my dry powder into the digital asset landscape, right? And then the third check mark, again, this is a very easy, simplistic strategy to make sure that I'm not buying at tops and that I'm keeping a low dollar cost average level across my digital asset portfolio, meaning that if you go and you look at whatever portfolio management application that you're utilizing, it usually gives you a buy-in average for your digital assets. So for me, as an example, my buy-in average on XRP is below 27 cents. That means that I haven't really bought XRP above 27 cents. Okay. Now I have bought some XRP above 27 cents, but the vast majority of my XRP I've bought below that area. Okay. And so you want to keep a relatively low average across your digital asset portfolio for the digital assets that you hold. That is the ideal strategy. Okay. You don't want to be buying at tops. You don't want your XRP buy-in average to be above $3. That makes absolutely no sense, right? So the third thing that I look for is that I like to see the total cryptocurrency market cap, i.e., the ticker symbol for the total cryptocurrency market cap that tracks all of crypto, okay, including Bitcoin. I like to see it below $50 billion. So any day that I see bearish fundamentals, i.e., risk off fundamentals, I see the crypto fear and greed index below the 50 grade threshold, and I see the total cryptocurrency market cap, as you can see at the top of my screen right here. Today, it's down 1.7%, okay? And it's shed about $57 billion. Those are the 3 things I like to see. So the market cap below 50 billion, preferably below 100 billion, right? So if we see $100 billion down on the day, that is 110% a day that I'm deploying capital. Okay, but 50 billion is my threshold. So down 50 billion, below the 50 grade threshold, and intraday bearish market fundamentals weighing on risk sentiment, creating more demand for safe haven. Those are the days that I'm looking to deploy capital into the market, because if you get those 3 things, 9 times out of 10, those are days that the market is discounted when prices are relatively low, which will allow you to keep a low price in average or a low buy-in average, which does what? Minimizes your downside risk because prices are lower and maximizes your upside potential. Okay. It is a very simplistic strategy. Now, this is a strategy that I utilize without leverage. It is very simplistic. Again, if I see these 3 things, that is when I'm deploying into the digital asset landscape for my DCA positions and my spot trading positions. Okay. So I hope that you guys enjoyed today's video breakdown. I know that it was a lengthy one. I know that it was a mouthful. If you stuck around for the entirety of today's video breakdown, you're a trooper and you actually want to mature in your market approach and understanding the current landscape and what it is that you're involving yourself in. So kudos to you. If you guys want to tap into our private CYPRX community, you want to gain access to hundreds of hours of crypto related research that never reaches the mainstream. You guys want access to the most accurate institutional deltas on the face of the internet right now that retail has access to, and we're the only community on the internet with access to them. If you guys want access to these fundamental reports, you guys want access to weekly Zoom calls, tap in with us in the private CYPRX Discord. This year, 2025, is not the time to be ignorant. It's the time to be enlightened. It's the time to be part of a community that thrives and strives and builds their foundation off of actual educational information and not just hopium, hype, and bullish expectations all the time. That is so inaccurate. And I promise you, if you have that mindset, you're going to continue to get wrecked in times like this. All right. So with that being said, I hope that you guys enjoyed today's video breakdown. If you did, do me a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. And with that being said, I'll see you guys in the next video breakdown.